once the shares are listed on the exchange, the shareholders or people who are not shareholders can buy and sell the shares. We call that the secondary market. The primary market is the IPO. Then the secondary market is on the stock exchange where people it's like a market where you go and buy potatoes and carrots or whatever. But in this one, it's you buy and you can sell.
Hope you're enjoying this CTA Masterclass. This is a CTA Masterclass on understanding IPOs. Rina, let's take it from there. Let's wheel it back, take it from the very beginning. What then is an IPO?
Okay. So I'll keep it simple. IPO stands for Initial Public Offer. And what it means is that a company is offering its shares to the public for the very first time and has never been listed. It's probably a private company, maybe even a family business or a government-owned enterprise that wants to then allow other shareholders to come and own a piece of this company. And therefore, then they will be able to raise money either for the business or for the shareholders who have been in the business for a long time. And so initial public offer simply means it's the first time that this company is offering its shares to the general public. Yeah.
There's a lot that you've said. It's such a small word, but you've unpacked it in such a beautiful way. When we're having this conversation, I've had people say, oh, the last time there was an IPO was Safaricom. Kenya's not had an IPO since Safaricom.
No.
Or Kenya's not had an IPO. I want you to give us the facts. When you were introducing yourself, I had you mention, I was like, what? Bank? What? When was the last IPO? And when was the Safaricom IPO? And have there been other IPOs within that time frame?
So the last IPO was actually Stanlib IREIT. I remember the Stanlib IREIT. So an IREIT is an income real estate investment trust. So that IREIT was on the October 2015. 2015. Yeah. I think because IREIT was new, REITs generally, real estate investment trusts have generally, well, at that time, it was the first time we'd ever heard about it, so it was very muted. It didn't do really well. I think it did about 28, 29% uptick. The one before that was, which one? I have it here, NSE. NSE was in 2014. Before NSE was Britam, which was 2011. And then before that was Cooperative Bank, which was in 2008, towards the end of the year. And before Coop Bank was Safaricom, which was in 2008, but earlier on in the year. Yeah.
When they say, is it because Safaricom was oversubscribed that we remember it, and why are we forgetting all of these others? I heard you talk about uptake of one of them.
Yeah. So I think it's multiple things. I think, first of all, the reason that the comparison is Safaricom is because of the sheer size of KPC. So these other ones were not very big in terms of how much they were looking to raise. Safaricom was looking to raise 50 billion shillings.
50 billion?
Yeah. And it's the closest to what we're raising now. We're raising 106 billion shillings.
Has there ever been an IPO of this size in Kenya?
No, not even in the region.
Not even in the region?
No.
Okay. Again, I'm taking people along this journey because...
Region being East Africa.
Region being East Africa. Hey, I like the way Rina comes. Rina is always coming correct. Check your facts.
Yeah, I have to check my facts. I'm like...
So, another word that you keep using is listing. So, you keep using listing in reference to IPO. Why are you using the word listing?
Because there's a second process. So there's a process of selling of the shares, right? So where people subscribe for the shares, they buy the shares. But once that process ends, then the shares are listed on a stock exchange. Meaning that once the shares are listed on the exchange, the shareholders or people who are not shareholders can buy and sell the shares. We call that the secondary market. The primary market is the IPO. Then the secondary market is on the stock exchange where people it's like a market where you go and buy potatoes and carrots or whatever. But in this one, it's you buy and you can sell.
Okay.
So there's a platform that has been created by the Nairobi Securities Exchange or the London Stock Exchange, New York Stock Exchange, wherever in the world you are, where you can buy and sell securities. And those securities in this context is shares.
Okay. Now, how come in this whole mix of companies that have found their way to the Nairobi Stock Exchange, I have not heard you mention Homeboys?
Okay, because Homeboys was not an IPO. It was what we call a listing by introduction.
What, I don't even know what that means.
So let me break that down. So Homeboys was not looking to raise money or capital. So they didn't offer shares to the public. All they did was they said they looked at the regulations, looked at what it would take for them to list on a stock exchange and not issue their shares publicly.
Okay.
And so they then got somebody to help them apply, and they then became listed on the stock exchange. But I must mention it was listed at that time on the GEMS market, the growth enterprise market segment of the stock exchange. That segment of the market at that time had minimal requirements to list. So you needed market capitalization of 10 million shillings. You need minimum, I think, is it 10 or 20%? I think it's 15%, I'm sorry. 15% of your shares are available for people to buy. So in terms of the requirements, they're not as onerous as the main investment market segment.
Okay.
So the reason you don't hear Homeboys is, first of all, it doesn't trade. I don't even think there's ever been a trade. I don't know, maybe once.
Yeah.
It doesn't really trade at all. But these other companies are liquid in the sense that they trade and people buy and sell millions of shares daily.
So there's two ways. Again, guys, I'm taking this slowly for those who are walking the journey with us. I don't want to leave any person behind. No man left behind, or woman. So there's different ways of getting onto the Nairobi Securities Exchange, or what I can call the Nairobi Stock Exchange. Why did they change it, by the way, from stock to securities?
Because stock is shares. But now they have more than just stocks. We have indices, we have REITs, I-REITs, we have derivatives, we have bonds that trade on the stock exchange. So that's why we call them securities as opposed to stocks.
I get it. It's not just stocks. It's not just shares. Okay. So there are two ways then of a company listing onto the Nairobi Securities Exchange.
Yes.
And one of them, and the one we are focusing on today, is IPO, Initial Public Offering. Now, that I've understood, I'm there so far.
Yeah.
By the way, you're brilliant, Rina. We got the right person for this. So, next question is, why do companies now, what is the purpose of the company? And I want us to be specific to KPC, Kenya Pipeline Company. Why is the government looking to raise capital by selling a piece of the company, and how much of that company are they selling?
Okay. So let me just first intro by saying that different companies list for different reasons. Okay. So this is not the reason that all companies that are listed on all markets in the world, this is not necessarily their motivation. So yeah, you're right. It's government owned, and government is looking to sell their shares.
Government owned currently 100%?
Yes. It's fully owned by the Kenya government.
Okay.
Through the National Treasury. The National Treasury is the shareholder. So the reason they are selling is there's multiple reasons. The first reason is to raise money for development. Okay, they've been talking about infrastructure and all of these things that they want to do. And so there's raising funds. But the second reason that they want to sell is the government is not in the business of being in business. You understand? How can we create efficiencies in our organization? So Kenya Pipeline is not the first privatization that they have ever done or will ever do. There's actually a whole list of privatizations that the government is planning to do.
Have they done any previously before
Yes, they
this?
have. Kenya Airways, KCB, Safaricom. Right? Those are just examples. Kenya Re, Kenya Reinsurance Corporation.
Yeah.
Those were government-owned institutions that they then decided to privatize and allow the public to come and participate and list the companies on the stock market. Okay, so those are just examples. So the third thing is a word that has been used a lot is to democratize the ownership of Kenya Pipeline, meaning that anybody, Mama Mboga, Wanjiko, Otieno, everybody, Rina, we can all own shares in this company. And that then deepens the capital markets. By deepening the capital markets, we are creating additional opportunities for the capital markets to provide an environment that then enables buyers and sellers of stocks to find opportunities to invest. But also companies that are out there that are looking for capital, they can come to the stock market or to the capital markets to raise capital because it's liquid, there's money that's flowing in and out. And capital then flows to the most productive companies, the ones that are run well and things like that. So when you have a deepened capital market, it then works for a lot of companies. And the economy then grows because you have companies that are able to raise capital. And when they raise capital, they're able to grow, to expand, they employ more people and so on. And economies then continue to develop in that way. So that's the third agenda, is to ensure that Kenyans also have the ability to participate in the progress of this company. Look at what happened to Safaricom. Safaricom under Telcom was just this small company. You know, it was a department in government. It was not this big corporation that we're seeing today. But through privatization, bringing in people like Vodacom and Kenyans and all these different investors, institutional investors that demand a certain level of accountability, the company has completely transformed to be the largest, most profitable company in East and Central Africa. We haven't seen anything like it. There's nothing like it in Ethiopia, in Congo, wherever around this area, in Rwanda, in Uganda, and everywhere else. It's only here where you have a company that is that. But it was privatized. It was a public company before that was privatized. There's a lot of advantages with privatizing because the company has to become efficient. Governance is improved. Accountability is improved. Safaricom has raised money multiple times using different instruments like bonds.
Recently they had is it the green bond or something like that?
I don't think it was a green bond, but there was a bond that... I don't remember it being a green bond. You've caught me off guard there. But I don't think it was a green bond, but it was a bond that they raised, a capital that they needed to be able to do whatever it is that they're doing. Perhaps it was actually. It was an infrastructure one.
But they were able to do it.
Because it was 10.5%, 10.4% tax-free bond. Yes. Yeah. So.
This is so... I love how you are breaking down and demystifying all this. Again, there's a word you keep using, and I want you to switch to your other hat. It's called, you keep saying this word, capital markets.
Yeah.
Again, there are people who may be watching who have who that word they've heard, but they really don't know what it means. When you talk about capital markets, what are you talking about?
How do I explain this? It's basically the space where people can come and raise money for their businesses. That does not include banks. So banks lend money to us, okay? So if I'm running a kiosk and I need money to support my inventory or my stock, I will go to the bank and ask for a loan, maybe for 1 million shillings to buy all this stock. And then as I sell, I pay back the bank. Now the capital markets provides an alternative way for me to be able to raise money. How? I can raise that 1 million by offering, let's say, a commercial paper. That's an instrument similar to a treasury bill where I say, I want to issue commercial paper. Okay, 1 million is not a great example, but I want to issue a commercial paper for people to lend me money, and I promise to then pay them back after 1 year or after 9 months. Once I have used it for my working capital, once I'm done, then I give you back your money. But the capital markets has different players. It has a regulator, it has investment banks, and it has institutional investors and retail investors. But the bank is just the bank and the client. So there's a whole ecosystem that forms the capital markets that then enables capital to flow easily. Well, easily, you know, and the reason I do this is because it doesn't just flow. You have to have a business that is working well, that is profitable, that will give back a return to investors, because investors are not just giving you money to just help you.
They want
a return,
yeah?
and a return that makes sense. Even governments use capital markets. So, for example, they issue bonds every month. They issue bonds, they issue treasury bills, and those then help to finance their budgets. So that's what, when I say capital markets, that's what I mean. And it's governed by the Capital Markets Authority, and we do have a Capital Markets Act in Kenya that then regulates and provides the law around which this ecosystem operates.
Okay.
Yeah.
The core reason as to why I did this episode was for people to understand what an IPO is. I feel like you have extensively explained it. We're going to take a quick break. When we come back now, we're going to focus on KPC.
Okay.
Who are these guys? What do they do? And what did you find out when you employed all those guys to look under the hood, under the bonnet, as we call it in Kenya, and figure out how this company works and whether it is actually profitable and the process of it then going to listing.
Okay.
We'll be back in a few. Again, don't be greedy. Share this one with the people who need this information. All ages, all races, locally and globally. We'll be back to continue the conversation.